Welcome to our channel. Today, we're diving into the fascinating world of aerodrome finance. This is a crucial topic for anyone interested in aviation, infrastructure, or finance. By the end of this video, you'll have a solid understanding of how aerodrome finance works, why it's important, and the key factors that influence it. Let's break it down in detail. Aerodrome finance refers to the financial management of airports and airfields. This encompasses a wide range of activities, from funding the construction and maintenance of airport facilities to managing operational costs and generating revenue. The goal is to ensure that aerodromes are financially sustainable while providing high-quality services to airlines and passengers. Revenue sources. Aeronautical revenue. This includes fees charged to airlines for using airport facilities. These revenues are directly linked to airline operations at the airport. Landing fees, charged based on the weight of the aircraft and the time of day. Heavier aircraft incur higher fees, and fees may be higher during peak hours to manage demand. Parking fees, applied when aircraft are parked for extended periods, including overnight or for maintenance. These fees help manage limited parking space at busy airports. Terminal usage fees, charged for the use of gates, passenger boarding bridges, and terminal facilities. Airlines pay these fees to cover the costs of terminal operations and maintenance. Passenger service charges, imposed on each passenger to fund terminal services, such as baggage handling, security screenings, and amenities. Security fees, levied to cover the cost of security measures required to ensure the safety of passengers, staff, and aircraft. These fees fund the implementation of security protocols, equipment, and personnel. Non-aeronautical revenue. These sources provide a significant portion of an airport's income and are essential for financial stability. Retail concessions. Airports lease space to shops and restaurants, which pay rent based on a percentage of their sales. Airports carefully select concessionaires to match passenger needs and enhance the travel experience. Car parking. Revenue from both short-term and long-term parking facilities. Airports often offer additional services like valet parking, car washing, and shuttle services to increase revenue. Property leases. Airports lease land and buildings to businesses such as hotels, cargo warehouses, logistics companies, and maintenance facilities. Long-term leases provide steady income and support airport operations. Advertising. Airports earn revenue from advertisements displayed throughout the terminal, on digital screens, billboards, and other strategic locations. These ads target a captive audience of travelers, making airport advertising highly valuable. Capital expenditure, CapEx. Capital expenditure involves significant investments in infrastructure aimed at expanding and modernizing airport facilities. Runways. Constructing new runways or extending existing ones to accommodate more flights and larger aircraft. This reduces congestion and delays, enhancing airport efficiency. Terminals. Building new terminals or expanding existing ones to increase passenger capacity. Modern terminals offer better amenities and services, improving the passenger experience. Infrastructure upgrades. Upgrading air traffic control systems, baggage handling systems, and other essential infrastructure to meet increasing demand and regulatory requirements. This includes enhancing safety features, improving accessibility, and integrating advanced technology. Funding sources. CapEx projects are funded through various means, including government grants aimed at improving national transportation infrastructure, private investments from companies seeking profitable ventures, and airport bonds. Airport bonds are debt securities issued by the airport, backed by future revenues. These bonds allow airports to raise significant funds for large projects without immediately impacting their cash flow. Operational expenditure, OpEx. Operational expenditure covers the costs required to keep the airport running smoothly on a daily basis. Staff salaries, paying the wages of airport management, air traffic controllers, security personnel, maintenance crews, customer service representatives, and other essential staff. Employee training and development programs are also included in this category. Maintenance. Regular maintenance of runways, taxiways, terminal buildings, and other facilities to ensure safety and efficiency. This includes repairing wear and tear, upgrading systems, and maintaining cleanliness. Utilities. Costs for electricity, water, waste management, heating, and cooling. Airports require significant energy resources, and efficient utility management is crucial for operational efficiency and cost control. Security services. Ensuring the safety of passengers, staff, and property through comprehensive security measures. This includes the cost of security personnel, advanced screening equipment, surveillance systems, and emergency response capabilities. Public funding. Governments provide funding for airport projects through grants and subsidies, especially for airports deemed critical for national or regional development. Strategic importance. Airports with strategic importance for economic development, tourism, and regional connectivity often receive government support. Public funding ensures these airports can undertake necessary infrastructure projects and maintain high service standards. Infrastructure grants. Governments allocate funds for specific infrastructure projects, such as runway expansions, terminal upgrades, and security enhancements. These grants help airports undertake projects that may not be immediately profitable but are vital for long-term growth and service improvement. Private investment. Private companies invest in airports through public-private partnerships, PPPs, or outright ownership, bringing in expertise, efficiency, and capital. Public-private partnerships, PPPs. In a PPP, the private sector may design, build, finance, and operate airport facilities. The public sector retains ownership and oversight, ensuring that public service goals are met. PPPs can accelerate project completion and introduce innovative management practices. Private ownership. Some airports are fully privatized, with private companies owning and operating the facilities. Privatization can lead to increased investment, improved efficiency, and enhanced service quality. However, it requires careful regulation to balance profit motives with public service goals. Debt financing. Airports issue bonds to raise capital for large projects. These bonds are typically backed by future airport revenues, providing a reliable repayment source. Airport bonds. Investors purchase airport bonds, providing the airport with upfront capital. The airport repays the bonds with interest over time, using revenue generated from operations. This method allows airports to undertake significant infrastructure projects without immediately impacting their cash flow. Long-term financing. Bonds are often issued for long-term projects, such as runway construction, terminal expansion, and technological upgrades. The long-term nature of bonds matches the lifespan of the infrastructure, ensuring a stable financial foundation. 4. Equity financing. Selling shares to investors is another way airports can raise capital. This method is more common in privatized airports. Stock market listings. Some airports list on stock exchanges, allowing investors to buy shares. This provides substantial funds for expansion and modernization projects. However, it involves giving up a portion of ownership and potentially sharing profits with shareholders. Investor partnerships. Airports can form partnerships with institutional investors, such as pension funds, sovereign wealth funds, and infrastructure investment funds. These partnerships provide long-term capital and strategic support for airport development. Economic cycles. The aviation industry is highly sensitive to economic fluctuations. Airports must plan for these cycles by maintaining financial reserves and diversifying revenue streams. Economic downturns. During recessions, passenger numbers often decline, leading to reduced revenue. Airports must manage costs efficiently and explore alternative revenue sources to remain financially stable. Economic booms. Conversely, economic booms can result in higher passenger traffic and increased revenues. Airports must invest in infrastructure and services to accommodate growth without compromising service quality. Regulatory environment. Airports operate under strict regulations from aviation authorities and government agencies. Compliance with safety, environmental, and operational standards often requires significant investment. Safety regulations. Airports must adhere to stringent safety standards set by national and international aviation authorities. This involves regular inspections, staff training, and investment in advanced safety equipment and infrastructure. Environmental regulations. Airports must comply with environmental regulations aimed at reducing pollution, noise, and carbon emissions. This involves investing in green technologies, sustainable practices, and environmental impact assessments. Operational protocols. Regulatory bodies set operational standards for air traffic control, ground handling, security, and passenger services. Compliance requires ongoing investment in technology, staff training, and infrastructure upgrades. Technological advancements. Investing in new technologies, such as automated check-in systems, advanced security screening, and baggage handling systems, can enhance efficiency and passenger experience. However, these technologies often come with high upfront costs and require continuous updates. Automated systems. Airports are increasingly adopting automated systems for check-in, security screening, baggage handling, and customer service. These technologies improve efficiency, reduce wait times, and enhance passenger satisfaction. However, they require significant initial investment and ongoing maintenance. Advanced security measures. Implementing advanced security measures, such as biometric screening, facial recognition, and artificial intelligence-based surveillance, enhances safety but involves substantial costs for equipment, installation, and training. Baggage handling systems. Upgrading baggage handling systems to handle increased passenger volumes and improve reliability involves significant investment in conveyor belts, scanners, and sorting technology. These systems reduce mishandling and delays but require continuous maintenance and updates. Sustainability. Airports face increasing pressure to reduce their environmental impact. Implementing green technologies, such as solar panels, energy-efficient lighting, and electric ground support equipment, requires substantial initial investment. Green technologies. Airports are adopting green technologies to reduce energy consumption and carbon emissions. This includes installing solar panels, using energy-efficient lighting and HVAC systems, and transitioning to electric ground support equipment. While these technologies have high upfront costs, they lead to long-term savings and environmental benefits. Sustainable practices. Airports are implementing sustainable practices, such as recycling programs, water conservation measures, and eco-friendly construction methods. These practices reduce environmental impact and enhance the airport's reputation for sustainability. Environmental certification. Achieving environmental certifications, such as LEED, Leadership in Energy and Environmental Design, or ISO 14001, requires investment in sustainable design, construction, and operations. These certifications demonstrate the airport's commitment to sustainability and can attract environmentally conscious travelers and businesses. Heathrow Airport, UK. Heathrow's financing involves a mix of aeronautical charges, retail revenue, and significant private investment. Expansion projects. Heathrow's expansion projects, including the development of a third runway and terminal upgrades, have been funded through a combination of debt and equity financing. The airport has issued bonds and attracted private investment to finance these large-scale projects. Revenue streams. Heathrow generates revenue from aeronautical charges, retail concessions, car parking, property leases, and advertising. The airport's diverse revenue streams and strategic investments in infrastructure have enabled it to maintain its position as one of the world's busiest and most efficient airports. Private investment. Private investors, including infrastructure investment funds and pension funds, have provided capital for Heathrow's expansion and modernization projects. This investment has brought expertise and efficiency to the airport's operations. Denver International Airport, USA. Denver International Airport has utilized public funding and bonds to finance its extensive infrastructure projects. Infrastructure projects. Recent expansions, such as the addition of new gates and terminals, have been funded through airport bonds backed by future revenues. The airport has also received public funding for critical infrastructure projects, including runway construction and terminal upgrades. Strategic location. Denver International Airport's strategic location as a hub for domestic and international flights has driven its growth and financial stability. The airport's focus on enhancing passenger experience, through improved amenities and services, has attracted more airlines and travelers. Operational efficiency. Denver International Airport has invested in advanced technology, such as automated check-in systems, biometric screening, and energy-efficient infrastructure, to enhance operational efficiency and passenger satisfaction. These investments have positioned the airport as a leader in innovation and sustainability. Aerodrome Finance is a complex but fascinating field that balances revenue generation, cost management, and large-scale investment. Understanding the financial mechanisms behind airports can provide valuable insights into how these vital hubs operate and grow. Whether you're an aviation enthusiast, a finance professional, or just curious, we hope this video has shed some light on the financial workings of aerodromes. Thanks for watching. Don't forget to like, share, and subscribe for more in-depth explorations. If you have any questions or topics you'd like us to cover, leave a comment below. See you in the next video.